On Saturday the 15th of August, 2026, crypto is stuck in a strange paradox. Bitcoin has slipped towards $62,800 after its post-CPI rally failed to hold, yet serious institutional money is not leaving the space. Washington has kept the Clarity Act alive, but only barely. The core story today is that everyone is waiting for a reason to commit, and no single catalyst is strong enough on its own. The days of easy rallies from a single data point now appear to be over. Strategy, the corporate Bitcoin giant formerly known as MicroStrategy, sold part of its Bitcoin stack last week. That is a significant sentiment signal, not because the sale was necessarily huge, but because when the largest corporate Bitcoin holder reduces exposure, it forces other treasuries to question their own conviction. That is exactly the kind of signal that can cool animal spirits quickly. Wall Street did the opposite. Institutional buyers deepened their crypto positions. At the same time, Bitcoin's own community is split over how the network should evolve, adding technical uncertainty to an already fragile price. Mastercard completed its acquisition of stablecoin payments provider Bvnk for up to $1.8 billion. The untold story here is infrastructure. Mastercard is not simply buying a crypto company, it is building the rails that connect stablecoins with traditional currencies. For a payments giant to pay up to $1.8 billion, the bet is clearly that stablecoins will become regulated, everyday money. That matters more than the price tag, because it signals where mainstream payments are heading, even while Bitcoin struggles. The current impact is a divergence between short-term price weakness and long-term building. Bitcoin's failed post-CPI rally shows that cooler inflation data alone is not enough. The market needs liquidity and a fresh catalyst. The Clarity Act surviving in Washington is positive, but Yahoo Finance notes it is unlikely to be enough on its own. For everyday investors, the message is mixed. Regulation is improving slowly, corporate conviction is uneven, but payment giants are preparing for a stablecoin-based future. This is not a bearish collapse, but it is a confidence pause. Looking ahead, the next few weeks are about catalysts, not hope. Bitcoin needs either a clear regulatory win, a liquidity injection, or a decisive resolution to the network split. Mastercard's Bvnk deal is strategic and long-term, so do not expect an immediate price pop. The Clarity Act may survive, but if it passes in weakened form, its market impact could be muted. Watch whether other corporate treasuries follow strategy's lead, because that would signal a broader shift in boardroom confidence. Until then, range-bound chop is more likely than a breakout. The takeaway today is simple: crypto is splitting into two markets. On the surface, prices are shaky and sentiment is cautious. Underneath, institutions and payment networks are building the plumbing for a digital asset economy. That gap between short-term fear and long-term infrastructure is where opportunity and risk both live. On Saturday the 15th of August, 2026, the smartest question is not whether Bitcoin bounces from $62,800, but who is positioned for the next stage of the market. That positioning, not daily price moves, will define the next cycle.